What is up, guys? Happy weekend. So I just want to make a quick update in this video on the dollar index, the S&P 500 and the Dow Jones, to take a look at what is happening there to help us for guidance within the crypto market. So let's start off by looking at the US dollar index. We have the weekly chart over here. We have the 50-week moving average on top of it. You can see the markets are closed on the weekends, which is why I'm making this video now. It's easy to have a look at the big picture once a week, and then we can keep that in mind for how to analyze the crypto markets, because what is happening does play a big role in the direction of crypto. Okay, so we have 103 over here. We have the 50-week moving average in blue, and if I put the annotations back onto it, you can see as long as we're below the 50-week moving average, we had our 2017 bull market, our 2021 bull market over here, and we did get below that. Dollar index was below the 50-week moving average, and it still is. But you can see now this past week we got that weekly candle to the upside, a green candle, and it does look like we might get a retest here of the 50-week moving average. Now it's going to be important, if that happens, to see, do we get a retest and then a continuation down? That would be ideal for the bullish scenario, okay? Because as long as we stay below this and we continue lower on the dollar index, it's likely that stock markets and crypto is going to continue higher. The problem is going to come in if we reclaim the 50-week moving average. If the dollar index closes above it with a weekly candle, then it's time to get cautious, because it might mean there is more downside coming in stocks and crypto, potentially for a longer period of time. So it is going to be important to keep an eye on this. And how I see this now with this weekly candle like this, it's probably going to get a bit of a rally for the next 2 to 3 weeks, which coincides with what I've been saying in the last video I made, where it is looking like we are about to get a pullback in Bitcoin. Okay, it is looking like that. We have that divergence setting up on the 4-hourly time frame, just like before previous drops in August and in the past. Go watch that video if you haven't seen that yet. So a bounce here in the next week or two on the dollar index is likely to result in a pullback in crypto and in the stock markets. Keep an eye on that. Then the question is going to be, do we reject after that bounce and continue lower, which will likely result in further upside in stocks and crypto? But we have to be very careful. If the dollar index here closes back above the 50-week average, we have to be careful of more downside in crypto and stocks. So keep an eye on that one. Okay, so let's look at the S&P 500, the SPX here, and things are looking interesting here because we have now got 2 weekly closes above the 50-week moving average, which in theory is a bullish sign. Okay, there's no guarantee, but the odds favor this being bullish and a continuation potentially to the all-time highs or new all-time highs. Obviously, this will be dependent on the dollar index continuing lower. So if we get a bit of a bounce, it's okay in the dollar index, as long as we don't get back above the 50-week moving average like I showed you. Because now, as long as dollar index keeps going down, that means the S&P 500 can continue to go up. And this is just very simple. You can go and look at this yourself. Go look at the data. Every time we reclaim the 50-week moving average, look over the last 10, 15 years. Okay, what has happened? Every time it's gone on to, as long as it crossed above there, sure, it retests it a couple times, but once it's above there, it continues to new all-time highs, new all-time highs, new all-time highs. So now we have 2 weekly consecutive closes above it, and that simply means the data favors that there is a good chance that this continues higher, okay? And potentially all the way back up to the all-time high or new all-time highs, and that is obviously invalidated once we drop back below it and get a weekly close below it. So for now, this is probably the best risk-reward long trade right now, because your invalidation is so simple. So, okay, maybe we get a bit of a pullback next week. That actually might be expected. So we could drop back a little bit, maybe to about 4,000 here to retest this. But at that point, you could be looking at a long entry on the S&P 500 with an invalidation. If we close below it again with a weekly close, then you can cut that position. But the upside is potentially the all-time high or higher than that. So that looks very, very interesting. I mean, if you go back here on the data, we have had all this bullishness once we get back above the 50-week moving average. That is full-blown bull market territory. And I know there's a lot of people saying, oh, everyone's bullish, everyone's too euphoric, etc., etc. But just look at the data. Don't worry too much about the sentiment. Simple invalidation. We close back below there with a weekly close. Things start to get questionable. We get below the 200 with a weekly close. Things are in full-blown bear market crash territory, like we saw in 2008. You can go and look over there. But as long as we're back above this 50, things favor the bulls. You can also see over here, if we switch to the daily chart, we actually had a golden cross here on the daily, which also does not happen often on the S&P 500. You can see the last time it happened over here in July 2020. Look at what the price did after we had the golden cross. Okay, we had the same thing over here in April 2019. We got that golden cross, and look at what the price did after that. So we have both of these signals, actually three signals. So we have the dollar index below the 50-week moving average. We have a daily golden cross on the S&P 500. We have two consecutive closes above the 50-week moving average on the S&P 500. That is about as good as it gets in terms of bullish confirmation signals. And the invalidation is very simple. We drop back below the averages, and well, then it ends up being a fake out, which obviously sucks. But the data and the odds favor this being a high time frame bullish signal where there is potential for this to run up to the all-time highs and new all-time highs, potentially even in the S&P 500 in the coming months, until we get that invalidation. So let's have a look at the Dow Jones Industrial Average, because it tends to lead the S&P 500 a little bit. It tends to be a little bit ahead in terms of creating the bullish confirmations and also in terms of the bearish confirmations. So you can see the Dow Jones Industrial Average. This is a weekly chart, and actually many weeks ago, before the S&P 500 did it, it reclaimed that 50-week moving average. It came back to test it, it bounced off it, and it is still above it. This is a bullish sign. Again, pretty much as bullish as it gets. Full-blown bull market territory is above the 50-week moving average. And again, you can go back in the past and look what has happened since 2009. When we broke above it, new all-time high. When we broke above it, new all-time high. We broke above it, new all-time high. We broke above it, new all-time high. Same situation. We broke above it. The question is going to be, is this pattern going to continue repeating? New all-time high. Based on the data, the odds favor it. Okay, it is likely that this is just the pattern and it's going to continue to repeat until invalidation. And invalidation here simply is if we get a weekly close back below the 50-week moving average. So once again, based on the data, the facts favor that upside, and it just gives you a good risk-reward setup. Even better when there is a bit of a pullback. The closer that you can long closer to that 50-week moving average, the closer your stop will be and the higher the potential upside. Even if we go back to the all-time high over here, you know, it's a good risk reward where, you know, if it goes back below that 50-week moving average, things are in danger. Obviously, if it goes below the 200 here in red, then it's a full-on warning for a potential global market crash like 2008. But above there, things are good, and above the 50-week moving average, the odds just favor upside. Okay, maybe the all-time high, maybe new all-time highs are still coming, and this all looks very bullish. And obviously, if the stock market is going to continue going up and the dollar index continues going down, it is likely that Bitcoin, and as a result, the rest of the crypto market, is going to continue higher too. So hopefully we get this repeat of a 2019 scenario where we have a multi-month rally ahead of us, potentially into April, May, June, and then I would start being careful, especially if the stock markets make those new all-time highs, because that is when all the bears will have been liquidated. Everyone will have been wrong. They will have been forced to close their shorts. And at that point, once we get new all-time highs, everyone is going to be insanely euphoric. They're probably all going to flip bullish, thinking, hey, there's no crash coming. We're only going to go up from here. And that is the exact trickery where everyone flips bullish right at the longs when we can expect a real crash. And especially, I've said this before, if the Federal Reserve starts cutting rates at that point in time. So if we get this rally to new all-time highs in combination with a rate cut, that could really end up being the top of the market, followed by a major crash, potentially towards the end of this year or maybe in 2024. So we have to keep an eye on that. But for now, the data favors more upside, I think, until invalidation, until closes below those 50-week moving averages. And it does look good for the bulls over the coming weeks and months. Obviously, I will continue to update once we get invalidation. If anything changes, I will update. So make sure you are subscribed to the channel down below. Smash the notification button. And smash the like button, give it a thumbs up, turn it blue so we can get this video out to more people. For the rest, I will see you in the next video.